Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today, we're just going to look at the Primary Vision Frac Spread Count, as tomorrow we have our OPEC and China update coming out. So we can get right to the good stuff, and we can see that today's Frac Spread Count came in at 70. So now, if you think about where we were last week, which was 76, so we had a decline of about 6 frac spreads. Now, this is something that is always interesting when you think about timing. You consider about when things are going to be pushed through. So most of the decline was really driven by some one-offs, some one spread coming down in some smaller areas. The bigger one that we think is going to really kind of drive this back to where we're considering the normal level of about, call it 75 to 85, is really going to be in the Permian. So things are really moving into place, getting the equipment where it needs to be, getting the personnel in the right locations before we really start to see some of this pick up. So again, these are the timing delays that we can expect. But again, we're within this kind of normal average that we continue to think that's relatively stable. Appalachia remained flat week over week, and we're starting to see some of these gas areas, maintain some of their projected spread activity through, at this point, through really the remainder of September, just based on how the curve has started to respond in their favor. You're starting to see some movements in pricing that will help incentivize keeping some of this activity relatively flat through the remainder, or at least over the next 6 weeks or so. So these are some of the key aspects, and it's important when we look at what's happening with the frac spread count 2019 versus 2020. And here you can see that, on August 9th, we had 366 spreads, and now we're down to 70. So there's about 300 spreads that have come out of the market. And this is when we start having our conversations about, well, what is this going to look like going forward? And we're going to have a report coming out that's going to look at what is overall horsepower supply, how many spreads are looking for work, how much horsepower is in each region. And then we're going to really kind of dig into, well, as we start to come out of this and as we start to look into 2021, 2022, how much horsepower will be available? How many people or personnel will come back to a place where they could have been laid off 3-4 times over the last 4 years? You're talking about a very difficult movement as we start to go out and as we kind of hang around this level of about, let's call it 75 to 85 through the remainder of August. And when we look at the 3 month, you can kind of see how we have that normalized level. We had the big drop as COVID really started to take hold as we went through March into April, and then kind of started to balance out in May. Again, this is where we're going to kind of see that fight back and forth. Now, we do think 70s is low, and we think that there's going to be a quick turnaround as we go over the next week or two. But, one of the things that we've been talking about is that August was going to start to see some of these additions. But as we start coming out of earnings season and we're hearing what guys are saying about Q3, maybe it's something where instead of seeing the huge jump in activity, it could slip into September as some of this activity starts to go, because maybe they want to make sure they have their hedging right, their takeaway correct, just to see kind of where things are going, because at this point, some of the exports will remain under pressure as we see pricing competition increase with some of the other international blends. But again, this 70 is just not something that is really going to hang in here. We think it's going to move closer to, let's call it, 80 to 85 as we head into the end of August and as we prepare for those September runs. So that's all we have for you today. We had a big report last week where we started to look at hedging. How does hedging factor in? How does the potential bankruptcies factor in? What does firm transport look like? What are minimum volume commitments? And why are we seeing some activity in some places that may not make the most sense? But when you think of who is the end user, being maybe a refiner or someone who is consuming this and they have their own agreements, you can start to see why maybe we never got as low as we should have, and we can kind of bounce back a little bit sooner, because it's going to matter on who the end user is and what those realized prices are. So stay tuned for, tomorrow we're going to have our OPEC and China show coming out. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Have a great weekend.